What's up, everyone? It's Karthik with MoneyVest. So what an incredible sell-off in the markets today, with the NASDAQ here down a little bit over 2.3%. We had the S&P 500 down 1.3%, and the Dow Jones surprisingly recovering a little bit back higher. Actually, it just updated. It was not recovered, down 1.2% on the day. So all three indices, Webull took a little bit of a time there to update. It was throwing me off. But all three indices are down quite aggressively, anywhere between 1.5% to as much as 2.3, 2.4%. And IWM was also down on the day. So if you come over to small caps, we witnessed a interesting sell-off in small caps also, down a little bit over, I believe, 3%. So this right here was the candle from today, down over 3.25%. On the day. So definitely quite an interesting sell-off here. And earnings were released. So a lot of companies reported their earnings, which I'll go over in just a minute. But we've also included this market snapshot or threshold on our MoneyVest platform, which I'm very excited to announce and share here. And this is essentially going to tell you the markets overall, are they in a dip or a correction or a pullback, including individual stocks. So for example, Alphabet is back into a correction territory since it is at $172.45. So if you click on Google, which is Alphabet, you'll notice that it actually closed at 172.45. After hours, it is down another 26 basis points, trading down to 172. So because it is now at 172.45, it is down a little bit over 10% from its all-time highs. Hence, it is now in a correction. So we've added a status check on each stock that will give you a bit of an idea on how much these stocks are down from their all-time highs. Amazon in a pullback, Apple in a pullback, Meta in a pullback, Microsoft in a correction now, down almost 11% from its all-time highs, so trading down to $417.11. As you can see, that's where it closed, and after hours, it is down another 72 basis points. And we've got, of course, NVDA, Tesla in a bear market, Broadcom in a bear market, Oracle in a pullback, Netflix in a correction, AMD in a bear market, Qualcomm also in a bear market, down over 28% from its all-time highs, Salesforce and Adobe. These are some of the few that we've included on the homepage, and this is, of course, on the left, our individual indices, right? So NASDAQ's in a pullback, down over 8% from its all-time highs, S&P down over 4.3%, so still within the context of a dip. The Dow Jones in a dip, Russell 2000 in a pullback, down over 5% from its all-time highs. So that's available on the MoneyVest platform, which you can also access. I feel like this is very useful information. And again, things like these we are going to include in our future updates. There's going to be more interesting analysis and data points that are going to be available for everyone to access. So link's going to be down below. We'd love to have you on board if you want to join our MoneyVest community. It's the first week of the month, the best time to join. And also, do follow me on Instagram. We're doing a free giveaway. So if you want to get access to the 4-course bundle, including fundamental analysis, technical analysis, options, psychology, everything's going to be available with over 100 plus video tutorials and 20 plus hours of content, almost $1,900 worth of value. If you are a lucky winner, we're going to be selecting a winner once the account reaches up to 10,000 followers. We're going to be doing free giveaways for the course. All you have to do to enter is connect with me on Instagram. My handle is going to be CASWRP. There's going to be a link down below as well. So again, we'd love to have you on board. So starting with the current jobs availability, this was an interesting chart posted on Twitter. So consumer confidence surveys, that's current jobs availability, and this has been a precursor to recession. So tomorrow is jobs report, unemployment Friday. I will be live during that time to cover the unemployment numbers that come out at 8:30 a.m. Eastern. And every time we've seen the jobs plentiful continue to decline, we have seen a recession that has followed. So there are going to be some indicators for us to watch that are going to tell us whether we are expecting a recession or not, because unemployment is a very, very important indicator to follow in order to understand whether there is any probability or any potential for a recession or not, because it's really going to come down to recession with respect to how the markets are going to do, because we also did get some geopolitical risk with Iran's, of course, decision of bombing Israel. That was part of the markets being a little bit more defensive. That's why we did get into a risk-averse nature, and I discussed that in my previous video, where bonds were the only sector, one of the only sectors that were pushing higher. Everything else was straight up red, with the entire semiconductor sector selling off. Tesla, Amazon, the riskier parts of the market were definitely rolling over, and this was the ETFs within the market. As you'll notice, the utilities, staples, and bonds, fixed income, were the ones that were pushing up. So this is a very, very defensive day, right? Markets are becoming defensive because they're pushing up to utilities, staples, and fixed income, which is bonds. These are three sectors that are considered as being more risk averse and defensive, and that's why stocks, equities, more specifically riskier equities, sold off, and money essentially flowed into staples, utilities, defensives, fixed income, and bonds. So that was the day in a nutshell, as I mentioned in my previous videos as well. So markets becoming very risk averse, utilities pushing up, real estate, consumer defensive, healthcare, all pushing higher, with of course other parts of the market rolling over. In the last 1 month, it's been a little bit more of a split, but technology and communication services and cyclicals certainly have struggled, and they're down anywhere from 2 to 6% in the last 1 month here. Volatility once again increasing, ethanol higher. We had cocoa prices and Nikkei and copper selling off. Orange juice was basically flat, I believe, on the day. I can't find it. It's got to be here somewhere, but there we go. Orange juice essentially flat on the day here, and Bitcoin just shy of 64,000, and Ether just a little bit over 3,100 as well. So these are the unemployment numbers coming out tomorrow. So employment situation is going to be at 8:30 a.m. Eastern tomorrow. I'll be live for that, and the consensus is 180,000 jobs added in the month of July, with unemployment rate steady at 4.1%, with 155,000 private payrolls, 2,000 jobs lost in manufacturing, participation rate at 62.6%, and average hourly earnings of 0.3% increase month over month. So that is going to be that consensus for unemployment moving forward. Now, want to also break down a few charts. So this right here was a report that was shared by Yahoo Finance. I find this to be very interesting. So Yahoo Finance chart book, 32 charts tell the story of the markets and the economy midway through 2024. I'll see if I can put a link down below for this, because this is a pretty long report across 32 charts compiled by economists and strategists on Wall Street. We see broad confidence that the U.S. economy can still achieve the vaunted soft landing outcome following the Fed's historical rate hiking cycle. So I'll share this in the comment section if you are interested in checking this out, because this actually has pretty cool charts. Like for example, inflation continues to slow and descent. This is the overall CPI. As you can see that, we were obviously much higher back in April, May of 2022. Since then, we have continued to come down. Some items have turned into deflation, like for example, core goods are seeing deflation, and other parts of the market, for example, shelter, because it's a much bigger part of the overall inflation, and of course, dining, hotels, other services, auto insurance, everything's been coming down. So this is a good chart with a visual representation of inflation. Scroll down a little bit. This is the labor market at an inflection point, going back several years, and kind of putting down different years worth of data. This is inflation data faces tough comparisons. So this is based on how much of a month over month change we see and what that projections look like. So for example, if we see a 0.6% month over month increase in just a few months, we'll be looking at 5.7% CPI once again. In fact, this is year over year PCE, so that's a personal consumption expenditure at 5.7% by the end of this year. But if we see no changes, in other words 0.0% month over month, then inflation is expected to come down to 1.4, right? That's going to be way below the Fed's target of 2%. That's exactly what we want to see. These are some of the paths that inflation is expected to take and should take at some point as inflation continues to come down. But it's charts like these that I feel like are super visual and very, very good in terms of this understanding. So labor data supports a September rate cut. This is total non-farm job openings, employees year-over-year change. And again, we continue to come down because job openings are coming down and unemployed persons are going up. And as a result, they do support for a September cut because unemployment is accelerating. Labor market is starting to weaken a bit. and that does support a rate cut from an economic standpoint, from a monetary policy standpoint. Stocks outperforming S&P 500 at a historical low. So percentage of S&P 500 members outperforming the index, and that number is only at 17.3% right now. It's much higher at over 56% as of December 2023. And I'm assuming these 16% is kind of concentrated in just Magnificent Seven and Big Tech, right? They are the only ones that have actually lifted the S&P higher to new heights, and they're the ones that are up like north of 20, 25, 30%. NVIDIA, for example, year to date is, I believe, still up triple digits. And companies like, again, Apple, Amazon, Google, they're all up on a year-to-date basis. So very, very small portion of the market is outperforming the S&P 500, and they're the ones actually lifting the S&P to newer heights. But we are seeing a bit of a rotation out of big tech over to other parts of the market as well. Investors skeptical about some AI growth here. So indexed return AI stocks versus equal weighted S&P 500. So infrastructure is going to be higher. Enabled revenues, productivity. I'll have to spend some more time to understand what this chart really is talking about. So these are some AI beneficiaries. There's also listed understanding of where what these charts represent, but this of course is our very own volatility metric. Low volatility is normal in a bull market, so VIX here continues to be of course lower, but we have seen a bit of an increase in volatility now. This is a bit more dated data because it's coming back as far as June 1st, but of course now we're in August. So again, I'll share this in the comments if you want to spend some time kind of looking at different economic data and charts here. I feel like it's going to be quite an interesting 32 charts for the markets and the economy. But yeah, so overall, we're starting to see a bit of a pullback, which is very normal for the market. Let's just quickly break down some earnings. So Vertex Pharmaceutical had a double miss. So if you come back to our platform, let's just come over to our earnings calendar. You'll notice that Apple reported small miss on revenue, beat on EPS $1.40. Apple after hours, it is slightly higher, 41 basis points, so not a big move at the moment. But we are seeing a small miss on revenue, beat on EPS. Same for Amazon, small miss on revenue, beat on EPS, $1.23 reported. Amazon after hours is down almost 5%. So definitely quite an interesting sell-off for Amazon, almost 5% lower, trading down to $175 at the moment for this company. And then, of course, coming back over to some of the other stocks here. Intel, double miss. Vertex, double miss. I believe Vertex will also lower after hours. There we go. So down a little bit over 1% at the moment, trading down to dead at $500 a share. So all of that's going to be available on the platform if you want to do further analysis and research on these companies. These are all non-GAAP numbers. So over here, we've mentioned this. All analyst estimates and actual reported numbers are non-GAAP. And that's why you may see some, small discrepancies in expectations versus the actual numbers being reported. Coinbase looks like a double beat. I'm assuming it's the stock price is higher after hours, and there we go. So 3.7% higher, trading as high as $220 at the moment. And then again, coming back over to some other expectations here. DoorDash seems to have beaten expectations on revenue, miss on EPS, and I believe Snapchat also reported. There we go. Snapchat, 2 cents in earnings per share, beat on EPS, small miss on revenue of $1.24 billion. Let's see how the price is doing after hours. Wow, Snapchat doing Snapchat things. Am I right? Down over 18%. This is the incredible sell-off here after hours, trading down to now $10.42. Wow, another 18.5% sell-off for Snapchat. Snapchat can never seem to catch a break. I mean, this is one of those companies that always sells off on earnings. I mean, I can't even remember how many times I've seen Snapchat sell off like 18-20% after hours. But anyway, coming back over to the markets. So this is going to be your S&P 500. Now, we did see a very nice start to the day. We did see a nice, acceleration to the upside of 55.64. But then, of course, we are starting to see that markets rotate back lower. Did a couple videos on this already. Becoming a little bit more risk averse, more defensive from the market with on the back of rate cuts, bond yields, pushing downwards, bond markets seeing a lot of liquidity flooding in, and with the geopolitical risk that we learned about, there's definitely some fear in the markets that's brewing this market sell-off, right? So resistance all the way up to 55.85, that's going to stay intact. Another resistance to keep in mind at 54.93, we're back below that level, and support level near term still aligned at 53.97, kind of aligned with this previous support levels as we've validated here. So if I were to mark those levels, 1, 2, 3, and 4, right? So inside this green line at 53.97, call it 5400 to be precise, is going to be that level to keep in mind for S&P 500 for now. We were in the context of a downtrend, so we were in this lower high and lower low pattern. Recently, we did break out, so you can see that this right here is a higher high compared to the previous high. However, we're back down to the same support level. So we really need to see breakouts above certain levels. Number one here, 54.93. And then, of course, one more all the way up here at 55.85 in order for us to regain that confidence that markets are indeed making some higher highs and higher lows, and we're out of the woods. But right now, we did kind of give up on a lot of the progress that we made yesterday and, of course, the day before, with some recovery coming in towards the back half of the day. At around 5,400, we bounced right back up. And then yesterday, we gapped up and pushed higher. Today, pre-market, we were higher. But then, of course, we gave all those gains back, trading down to 54.46, down about 1.3%. So support level 5,400, a couple of resistances back up to 5,500 and 55.85 to be precise on S&P 500. NASDAQ, same exact thing. We're back down to the same level as where we were just a couple days ago. You can see that we got a nice little rebound on July 30th, then a huge gap up yesterday. Pre-market today, we were doing well. Then just a straight up 6-7 red candles coming in for us to trade all the way down to low 17,000s and down about 2.3%. So kind of giving up on all that progress from the last 1.5 to 2 days for the markets here. So coming back over to QQQs, very much in the context of what I would like to call it a lower high and lower low again. We did start to make some higher highs. You can see that we got rejected here at this resistance, previous support level, that acting as a resistance here, got rejected and sold right back down. And this 467 is going to turn back into a resistance for QQQs with a very strong area of demand and support sitting put right over here. But the messaging is clear. I want to be very consistent and clear with all of you. This is an opportunity dollar cost average into the market. Nothing changes. Volatility is higher. As you can see that it traded back up to over 18.5, up over 13%. So again, when the VIX is high, it's time to buy. Don't miss out on these buying windows, buying opportunities. Be very direct, be very bold, be very aggressive, be very decisive in your decision making. And again, don't let these opportunities slide by. I'm not saying to deploy everything now and just go all in. Just start is the only message, right? I'm not going crazy, but I am deploying cash and dollar cost averaging slowly and steadily, right? So I don't mind putting in money a little bit here and there. And as the markets continue to come down, volatility continues to go up, money vest index continues to come down, that's only going to present better and better opportunities. I'll update everyone on where the money vest index is. Right now showing 3.83. This is as of yesterday's rally that we witnessed. This number needs to get updated. It updates end of day once everything settles. A lot of the other technical indicators that are part of the calculation, once that settles, this number will update. And we're going to make this available on our MoneyVest platform very soon as well. So you can take a look at it on our platform. Coming over to individual stocks. So Apple, after hours, down almost 1%, as we showed you on the platform, MoneyVest platform as well. Coming over to the 30-minute time frame, you can see the consistent lower highs and lower lows. Got a little bit of a breakout as similar to the S&P and the NASDAQ, but then gave back all those gains. Resistance is going to turn back over to 220, and support level is going to be at $215. So this right here is going to be that level once again for Apple. Talking about Amazon, I can't even see where it is, down about 5%, still within the context of what I would call this to be a head and shoulders. Neckline staying put at 173. Of course, after hours selling off quite aggressively. So support level is going to stay put at 173, 174 for Amazon, with a very strong resistance at 189, close to $190 for Amazon. So a little bit of a head and shoulders here, with the right shoulder potentially forming. But you never know, we might just break down below the neckline before the right shoulder is even complete. So 173 is going to be that support level to watch for Amazon. Tesla, on the other hand, down about 6% today. Wow, I didn't even realize Tesla was down 6% today. By the way, I didn't even show you guys how much I was down. Let me just take a quick look. Where is it? Boom, right there. So I was down almost $13,000 on the day. Yeah, there we go. I just completely forgot about that. So yeah, down almost $13,000. Pretty big damage to the portfolio, but that is on the back of course, Tesla, SMH, VUG, everything just rolling over and selling off. So not a surprise. So fantastic day for us, for the markets, and for technology investors. So Tesla here, quite an aggressive sell-off, getting rejected at 233. So was not able to break out the last couple of days as it traded back up to 230s, and then selling off right away. Support level is going to stay put down to $208 now for Tesla. That's going to be that next support level to watch. It's been very long weeks, guys. If you haven't noticed, I am sleepy. The last couple of weeks have been very, very busy, as I'm sure you'll know, with Jerome Powell's earnings and unemployment numbers coming out tomorrow, the earnings and market selling off. It's been quite hectic. So yeah, support level is going to be $208 for Tesla. Resistance stays put at 233 at the moment. Coming over to NVIDIA now. So NVIDIA also getting rejected at around that $118 resistance, as we discussed, down almost 6.5–7%. On the day. So this right here is going to be that level to watch. Very, very volatile NVIDIA is. I mean, it sold off over 7%, then bounced back over 12.5%, almost 13%, and then today's down almost 6.5–7%. So it's just been all over the place here in the last couple of days. And very strong support is going to stay put at $96 a share. Still got a cash to good put with a $90 strike on NVIDIA 30 days out. So that is something that I'm still going to follow through on and see it all the way through, and going to be closing it out at a 90–95% profit very soon. So support level is going to stay put around $95–96 for NVIDIA. Talking about advanced micro devices here, and AMD on the day, also pretty brutal sell-off, down over 8% on the day here, and getting rejected at this resistance. As you can see, that this right here, very, very important area of supply and resistance for AMD. And if you come over to the 5-minute chart, let's see what the low was today. For NVIDIA, for AMD, I got a support at 130.55. Ooh, off by a few cents here. Came down to as low as $130.23, and then bounced right back higher to over 133. So up over 2% from that support. Come over to the daily chart, you'll notice it's perfectly sitting between that area of supply and resistance in the 150s, and a very strong support validated in the 130s for advanced micro devices. Talking about PayPal. And PayPal here down about 71 basis points. So, trading just over $65. A very strong area of resistance here, sitting at all the way up to as much as $68–69. It's gotten rejected here multiple times, once, twice, 3 times. So we got a huge resistance and area of supply there for PayPal, and support level is going to stay put all the way down to $56–57 for PayPal as well. Talking about Visa, and Visa here continues to trade inside this lower high and lower low pattern. So boom, 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 getting knocked around. Big resistance that it's coming up to now. Got rejected here at 265, 266, and the support level stays put right over here at $249 to $250 for Visa. Talking about Meta platforms, and Meta here also selling off after the earnings. Green day, but a red candle definitely does suggest some intraday selling pressure for Meta. And Meta again reported their earnings yesterday after the markets closed. If you come over to the earnings calendar, beat on EPS, beat on revenue, just over $39 billion in revenue, over $5.16 in earnings per share. So quite an interesting day of almost 5% increase. After hours, it's essentially flat, trading just under $500 on the day today. So 458 support level all the way down to inside this green rectangle at closer to 420, and resistance and that area of supply is going to stay put at $540 for Meta as well. Talking about Netflix, and Netflix here, it's been, the lack of volume has been quite interesting for Netflix. There hasn't really been a lot of momentum or volume, but it's just been slowly and steadily drifting lower, getting rejected here in the 640s, and support level is going to stay put at $597 to as much as $600 for Netflix. Finally, coming over to Google and Microsoft. Google also getting rejected at 174. So this right here is going to be that area of resistance for Google. Support level inside this green rectangle in the 160s for Google, all the way down to 153 for this stock as well. And then finally, if you come over to Microsoft, also continues to sell off, down a little bit over 10%, I believe, from its all-time highs. Yep, so 11.5%. That's exactly why our platform shows a correction for Microsoft here. So down almost 11%. Down to a correction at the moment compared to its all-time highs. So that's where we are. Inside this green rectangle is where the support is going to be, close to $400 a share for Microsoft, and a resistance all the way up to $432 for Microsoft. So that's going to be that resistance, very strong area of demand and support in the low 400s, sub 400s for Microsoft. And finally, coming over to Inphase and Costco. Inphase on the day also selling off, down almost 5%. I mean, every stock got hammered on the day. And green rectangle, we got a support at $97, $98, and a resistance up to 138 to 140 for Enphase as well. And then finally Costco, also consolidating sideways at the moment. Got a bit of a breakdown below 838. Support level is going to stay put at 785 for Costco, but again, valuation's a bit too high for Costco in my opinion. So I think there's going to be better opportunities elsewhere until Costco comes down to a bit more reasonable level from a fundamental standpoint. So bottom line is, everyone take a deep breath. I want everyone to just relax. This is part of the market. This is part of the market cycles. We have witnessed markets go up, they come down, they go up, they come down. It's just part of the cycle that markets operate in. So volatility is higher, markets rolling back down, MoneyVest index is coming back down. So let the prices come to you, let the opportunities come to you. Be patient, trust the process, stick to the plan, don't divert away. Yes, there's going to be other stocks, other ETFs, other parts of the market that are going to do well, and they're going to be kind of like that sweet candy that you want to go and chase, but just trust the process and trust the plan over the long term. Hope you all enjoyed this video. Let me know your thoughts down in the comment section below, and make sure that you drop a like and subscribe to the channel. Tomorrow's unemployment numbers are going to be very, very important. I will be live to cover them, and as always, make sure that you drop a like, join our MoneyVest platform. 16% annual discount available until a few more days here. As always, happy investing. I'll see you all in the next video.